What is going on, everybody? Welcome back to yet another video. So in today's video, I'm going to be explaining how you can make $100 a day as a small trading account. But real quick, as always, if you guys do find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. But without further ado, let's hop into the video. And then real quick, in case you guys did not know, I do have a 450-page book on Amazon titled The New Age of Technical Analysis. And in this book, I go over my entire day trading and swing trading strategy, how to find bounces, rejects, support and resistance, all the indicators I use, specific day trading and swing trading strategy, plus much more. So if you guys do want to check out The New Age of Technical Analysis, currently on a little discount, the link will be down in the description. Alrighty, so let's hop into how you can potentially make $100 a day as a small trading account. Now, to be completely honest with you guys, the one thing that you need to do is you need to learn how to let your winners run. If you do not let your winners run, because as a small account, you're more than likely not going to be doing 5 contracts. You're more than likely going to be doing 1, 2, maybe 3. If you're doing 1 contract, it's going to be very, very hard to hit that $100 goal. But once you do upgrade to those 2 or 3 contracts, that is when you have that potential to hit that $100 a day. So like I said, holding your winners is what's going to be very important. I talk about sniper entries all the time and why they are so important, because a really good example could be, say we were looking for a bounce, I don't know, let's just take this pivot low to pivot high right here. You can see that price bounce right off of that 50% retracement this day right here. So you need to have a proven profitable strategy, whether it just be basic support and resistance, Fibonacci, supply and demand, VWAP bounces, EMA bounces, rejects, whatever it may be. You need to have a strategy that is proven profitable, and you need to determine how to get those sniper entries. I do have videos speaking on sniper entries. So if you guys do want to check those out, I do have some of them on my channel. I will be leaving one of them down in the description. But regardless, you need to get really good entries, because as a small account, you cannot afford to take those large losses. There's a reason why a lot of traders avoid trading breakouts. It's because when you're trading a breakout, you don't necessarily have a well-defined risk to reward. That's because when you're trading a breakout, you don't really have a well-defined stop out point. But when you use supply and demand, support or resistance, VWAP, moving averages, Fibonacci, whatever it may be, you know that your invalidation point or your stop loss is right on the opposite side of that level. So for me personally, I really love using Fibonacci. I talk about Fibonacci all the time on this channel. So we're going to look at this Fibonacci example right here. So always what I am looking for is for price to break through the retracement, reclaim it, and ideally for it to have heavy volume, because it's showing me that buyers or sellers are active in that area. So let's just say you're a small account and you go in with 2 contracts. Typically my stop loss would be right below this level right here. So again, if you're going in with 2 contracts, your stop loss is going to be very small. You don't want to be that person that's buying your contracts all the way up here, because then where's your invalidation point? All the way down here? The risk reward doesn't really make sense there. But if you were to get long, let's just say halfway through this candle right here, now here is your risk. Much smaller than if you would have entered long up here. Again, at that point, you don't really have a well-defined stop loss unless you're going all the way down here. And at that point, the risk reward doesn't make sense. So let's just say that you ended up buying those 2 contracts. Again, you're a small account. Here's your stop loss. Should be a tiny little paper cut if it is hit. Now, something I do want to mention, when I am trading SPY or QQQ, I do not trade 0 DTE. I know as a small account, it might seem very tempting to trade those 0 DTEs because they're cheap and they move quick. But when those 0 DTEs move in your favor and they move quick, of course, we love how the profits look. But when it pulls back hard and it smacks your stop or it breaks below your stop out point, that's where you're going to see the losses start piling on. So for me personally, when I trade SPY or QQQ, I don't like the 0 DT. I don't like how quick they move. I prefer to do the Monday, Wednesday, Friday expirations, less volatile. And if it just sits here and consolidates, I'm not going to get stopped out on my trade. If you're sitting here in a consolidation and you're in 0 DTE, then the contracts are going to start dropping. And then say it slightly drops against your position or goes against your position, you can get stopped out. So that's why I don't like 0 DT. In my honest opinion, if you are a small account, do not trade 0 DT. So again, in this scenario, we ended up buying 2 contracts. Stop loss would be right below here, paper cut if it's hit. Now, as this thing starts going up, and what small accounts or newer traders start doing is they take profits at the first sight of green. So as this thing started pushing up, maybe you only caught it into this candle right here. Now that might be, I don't know, 10, 15% on your contracts. But if you're a small account trying to grow that account, you need to force yourself to hold your position. So if you got in literally all the way down here, now price is pushing all the way up here, and again, let's just say you're in 2 contracts, you have a choice. You can trim one of your contracts and then set the stop loss at break even. Or what you can do as it pushes in your favor, just put your stop loss at break even. If price pulls back right down onto here, you would be stopped out. Now, again, if you're that person that ends up selling here, well, there is still so much more potential in this trade you just don't know about because you took your profits too quick. So as we see, price pushed up, it then pulled back, which is normal to happen in a position, whether you're short or you're long. Pulled back, set that higher low, went and set an equal high, higher low, equal high, equal low, and then it set a higher high, higher low, higher high, and it just continued to push. So as that trader with the small account, you're gonna have to force yourself to hold through scenarios like this and get comfortable because it's going to happen. Now, getting comfortable with holding your position, it's something that you have to force yourself to do. It was something I was very uncomfortable with until I consistently every single day made myself hold the trade a little longer each time. And then I got a lot better at holding my positions longer, and I've been able to make much larger profits on my winning trades. Now, again, if you got stopped out, it was a small loss, but as this thing pushes up, get your stop loss to break even. Worst case scenario, you lose profit. That's it. You're not going to lose money from your account. You're just going to lose that potential profit. So in order to figure out if you're going to make a larger win, you got to be willing to hold through it. And as you can see, if you were patient and you followed your system, again, support, resistance, supply and demand, Fibonacci, whatever it is, this thing ended up paying off big time as it pushed all the way from 41.16.5 all the way up into a high of 41.36, which is about 20 points, which would be around $2 on SPY to the upside. We can even look at another trade scenario. If we head on over to SPY and we look at Thursday, we can see on Thursday, this was a trade that we actually ended up taking in Team Bull. If we take this pivot high to pivot low right here, we were able to catch this reject off of this 61.8% retracement. So the entry was given on this candle right here. Stop loss was right above this area right here. So let's just say that you went in with 2 contracts. You could be that person that literally just caught this move down and then sold your 2 contracts. You're going to make a little bit of profit, but not nearly as much as you would have if you held through and then caught the low a day and then continue to hold with your stop loss at break even. Maybe you pop one off at low a day, set your other stop loss to break even. Like I said, it's normal for price to pull back. So it pulled back, it set that lower high, and then it continued to grind down all the way down into a low a day, all the way down at 406.15. So moral of the story, if you are a small trading account, you're gonna have to get comfortable holding your positions longer. And as you build that consistency and you start to develop that patience and feeling comfortable holding your winning trades longer, over time, obviously your account is going to grow and you can slowly start to add size. So maybe you go from 2 contracts to 3 contracts, 3 contracts to 4, 4 to 5, and then slowly over time, you're doing the same exact thing, but just with a slightly larger size. But that is going to wrap up this video. So as always, if you guys did find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. Everybody have an amazing rest of your day, and I'll see you guys in the next video.